This is how you can use correlation to your advantage. It's one of the questions I get asked a lot. How do you utilize correlation? Well, I thought I would recreate a video that's going to be super useful to you as to something that is relevant and happening right now on the DXY, euro dollar, and especially pound dollar as well. There's a lot of moves that are going to be happening for Q4. So what I want to do is just give you a bit of an overview perspective on what's happening right now that's going to help you take advantage of these opportunities regardless of what strategy that you have. So let's get into some chart work. So from a DXY correlation point of view, many of you will probably be aware, you've got euro dollar, you've got pound dollar. It's not going to be candle by candle, but you're going to start to understand when the DXY is going to the upside, you're going to have euro dollar going to the downside. So when the DXY is going to the upside, you're going to have pound dollar going to the downside. So you can use that correlation to your advantage when you understand the positioning. So why would it be useful right now? We'll go over pound dollar after, we'll look at euro dollar. So we had a move on euro dollar today, right? So this is actually a mistrade for me. Now this was one that was forecasting, I had a very, very busy schedule today, just one of those ones. Listen, the most competent traders, you'll miss positions. So as a mistrade, let's firstly, actually I'll go to the full screen so you can see euro dollar here, why we was looking at this trade in the first place, following the same mechanical thought process all the way through. So what we tend to do, and I think people get very confused when they see a trend line thinking that we trade trend lines. We don't trade trend lines. Let me just address the elephant in the room. We are using the structure of the market to determine our trades. If they happen to line up and that works to our advantage, it's not the catalyst. So I just want to address that because people get very confused. They're like, so you're taking the trade off the trend line. No, who said that? It's, again, lack of education, lack of understanding on how we trade. For example, I will show you. See how this high here, right? This becomes a footprint in the market. We're looking to take trades in these areas once we break the high. Now, notice how, if I just zoom in here, notice how price action here doesn't break that high, right? We're not looking to sell here just because it rejects a random little area when people are too zoomed in. We're looking for price action to take out that high. Now notice how this sell doesn't equal that low, and then we start to correctively move up to eventually take out this high. Why? Because the original area, the volume has been built up there. We're looking for price to take out that high before this sell to the downside. That's the idea of the move itself. Now, before I get into this move and I show you the correlation and how it can be to advantage, the same mechanical thought process all the way through. So exactly what I just taught you, let's take a look at it in sequence. So this sell here, there is the footprint in the market. Notice how this high doesn't take out that high. This high does, but it still leaves a gap between here. We can all agree on that, right? And then what happens? We eventually take out that high before we sell. Okay, let's move a little bit further. So we go down to this area. Notice how you've got this high. I'm going to zoom in. Notice how this little high doesn't take out that high. This little high there doesn't take that out. It leaves a gap, doesn't it? For eventually takes the high out, then it goes. So what you're seeing here, you're going to see it again on a larger degree. So that was a more zoomed in version of it. And you can see we create this U shape before we sell off. What have we got here? What have we got here? So we have our footprint there. This high doesn't take that out, of course. This high equals to that one, just taps above, but doesn't take out the area of significance. And eventually we take it out before we go. So it's the same. That's just a real quick fire lesson without me going granular. There's obviously variations and intricacies on how we trade that if you want all of the exclusive knowledge and you want the A to Z understanding on how to build into these trade ideas, links are in the description. If you're interested in joining the membership, you have access to absolutely everything. However, it's the same thought process. So what I just showed you down here, is that not the same then? Right? So is that the same? So the reason why I'm bringing this up is that when we talk about trend lines, we're not trading trend lines because by that logic, we would just sell randomly here, but that's nothing to do with that. The trend line itself is identifying the structure of completion. So when you match it with value areas, yes, it becomes extremely useful. So as I mentioned, we then put this on to what we're actually looking for versus what you think we might looking for is the same systematic process. This high takes out this high, but it leaves a gap to where the volume is. This high takes out this high and intersects with the volume, which then is the causation of the move. Can you now start to understand that it's less to do with the trend line and more to do with the structure of the market? So when people leave those comments, they're very misinformed, they don't really understand. So with this now leading to the correlation part, let's do a split screen. Right, so we'll grab the DXY up here. How could this be to your advantage with this particular move? So I won't go into the entry. Well done for anyone in Falcon who did take this move. Nicely done on quite a few time frames, right? So DXY. So if we're looking at it from a correlation point of view as to how this become useful for us, I firstly have to show you on the daily time frame. So remember, we're looking for this bigger move on the DXY. I'm going to show you the fib first. We are looking for price action to react with this 50% fib for this next impulsive wave to the downside, so we can position ourselves nicely on these dollar cross pairs. So notice how we've just started to tap into that area, but with no real progressive sells. It's just very corrective. Now, what we do so have above is this ray line here. So notice how that was the last sharp move up before the market sold off all the way to that low. So that was the last part, which is that gap that we're seeing here. If we're looking at, let's say, euro dollar on the weekly time frame, I could show you this on the weekly, and you could see, I'm going to zoom in a little bit, so bear with me, this is really important. If I show you that on the weekly time frame, you could argue, if I just strip that all back, we are positioned for the longs on euro dollar right now, right? We were there with that low test, we filled that gap, we filled all of these wicks, so effectively the bigger players are stepping in, and we are positioned nicely for longs on euro dollar. Well, when we're looking at the lower time frames on euro dollar today, what would have given you the clue that you could still look for those sells? Bearing in mind, we are positioned where a lot of the bigger players that have been selling for a period of time, they're not going to be holding those short positions, they're going to be getting out of the market, and we can see that through price action. However, the sell was still on the cards. The sell was still valuable to start taking this with our target area roughly around here. Whether it gets all the way to the low again, that remains to be seen. You just manage accordingly. But the reason as to why is because we can go back to the correlation of the DXY. If the DXY is going to carry on going higher, why would the DXY have any reason to go higher first? Well, we look at it. You can see that if we were going to just sell off from that 50% fib, which was roughly around here, we would have done it already. And what have we done? We've just created a correction in the market to go back up to tap into the last area, which happens to be the original footprint before that move came to the downside. So when you're looking at euro dollar for the longs, bear with me here, for those of you, it might be going right over your head, but for those of you that are following along, if you're looking for now the longs on euro dollar, can you see how, if this is the inverse correlation and the DXY is literally giving you a clue that there's a potential one more move higher, what's going to happen? You're going to get trapped into longs on euro dollar because maybe your strategy, maybe your system has told you, yeah, euro dollar shaping up for a buy. Well, without understanding the correlation and the positioning of the market, you would get into a low quality trade. But just by understanding what I told you, can you see how I'm utilizing them, not candle by candle, but I'm looking at the position and the likelihood of the DXY can go up one more time, which means that now when we're looking for sells on euro dollar, does that not now make sells on euro dollar highly probable? Versus if you was to just look at it on its own, you would say, well, the high time frame is probably going to override all of the lower time frame here. So why would you look for sells on euro dollar? We would look for sells on euro dollar because we know it's the flip. It's the inverse correlation of the DXY. So when we're looking at the dollar index, that gives us such a key clue for our positioning when we're looking at a euro dollar or we're looking at a pound dollar. So that's just a very simple example. So for you to not get trapped on the wrong side of the market by not knowing where the positioning is. So really, really simple lesson. If you watch this, just exactly what I just showed you, if you watch it a few times, you will save yourself such a big headache. I bet you could go back and analyze so many trades you've taken in the past and realize if I just understood a little bit more about how the DXY can play a role in my decision making on like a euro dollar trade or a pound dollar trade, you'll realize how useful it is. So now, if we go over to pound dollar, it's not as successful with pound dollar as it is with euro dollar because it's weighted more on euro dollar. You're going to get more of an effective overview. However, it's still the same thing on the macro time frame. So with the DXY moving to the upside, pound dollar is going to be moving lower. When we get the flip in price, we now need to start looking for value areas. So from a positioning point of view, pound dollar still looks as if we can move one more leg to these lows, these areas, and that would be the area of value that we start looking for longs on pound dollar. It doesn't need to get right all the way to the low, but more often than not, the bigger moves, they are breaking areas of significance, which you can see that very clearly on the charts. So that can give you a bit of a clue. If the DXY starts to sell off, well then guess what? We are going to start to see pound dollar go a little bit earlier. Once we start trading above these levels, then you can start to look for longs pretty safely into that high. Anything earlier is going to be a bit of a risk, so know where you're positioned. It's either going to be above this low, trading above here, into that high, or once we've tapped into here, and then you start to look for the longs. What's going to be way more applicable to you is going to be DXY euro dollar. The DXY is literally at such a pivotal point right now that this next run in Falcon, we're well positioned. There's a reason why, guys, that we were able to predict this sell. Anyone in Falcon, just go back to the old webinars. Go back to literally this move that we were looking at and the amount of moves we were able to capitalize on that euro dollar sell. What do you think we're going to be doing on euro dollar, pound dollar, and these dollar cross pairs when the DXY is literally primed for us to be able to get involved in these moves? This is the line in the sand, is what I would say. And I've mentioned this on this channel previously, right? And I'm really giving you some secret sauce here. I know you might not know the how. You're probably asking me, Mark, but how? How do I enter the market? Direction is one thing, knowing the intricacies is another, but I can't teach you that in one video. You're gonna have to go through our content. You're gonna have access to our membership to be able to know week in, week out. That is where you're gonna grow. I could give you a whole lesson right now and you still wouldn't understand it because you need that ongoing weekly mentorship. So at the right time, in the right moments, I'm interpreting it for you. Why do you think we've been able to see so many people passing our fund recently? Why do you think we're able to see so much success? Because our methodology is consistent and it works. So with the DXY, if we're looking at the bigger picture right now, there's two scenarios. The line in the sand is right here and we're going to look for a sell. If we close above and then we're seeing a similar formation like this above here, well then that is the market giving us a message that we're not selling off from here and then we're going to be trading long into that high, which means what does that do for us? That positions us on these dollar cross pairs. So if we're going to see the DXY buy and there's going to be heavy long positions into that high, what do you think is going to happen with euro dollar? We're going to switch over to euro dollar and then we're going to look at the significant areas in where can then euro dollar go. Well then the next position would be down into these lows here. So we would then just position ourselves for sales on euro dollar. And that is literally as simple as it is. So that's how you can utilize the DXY and euro dollar to your advantage, and you can bring in a few other dollar cross pairs as well, like if you're going to be looking at an Aussie dollar or a Kiwi dollar, but maybe I'll go into that at a later episode. But what I hope is that this simple episode just gives you a bit of an insight. I thought I'd make that for you today purely just because this move happened on euro dollar, and this would be a prime example as to how I'd look at the positioning on the DXY and see, right, does this make sense for one more sell, or are we positioned more so on the opposite side? Hope it's really helpful. Let me know your #1 takeaways for this episode and if you enjoyed this type of content.